Preparing for a KYC in transfer agency, investor onboarding, PAN, FATCA CRS interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is the role of KYC in transfer agency investor onboarding? KYC in transfer agency is the control layer before an investor is allowed into a fund register. I would verify the investor's identity, address, tax status, ownership structure, and risk profile before accepting subscriptions. It protects the fund from AML, sanctions, and tax reporting breaches. Good KYC also prevents downstream issues in dealing, dividend payments, FATCA CRS reporting, and investor communications, because the register depends on clean onboarding data. While answering, focus on investor identification, AML compliance, account setup, subscription acceptance, regulatory protection, and how KYC quality affects dealing, distributions, reporting, and ongoing investor servicing. Question 2. Walk me through the investor onboarding process in a transfer agency environment. I treat onboarding as a controlled workflow, not just document collection. First, the application or subscription pack is received and checked for completeness. Then, I validate identity documents, address proof, PAN or tax identifier, bank details, FATCA self-certification, and beneficial ownership information. Screening is performed for sanctions, PEPs, and adverse media. After risk rating and maker-checker approval, the investor account is opened or held pending deficiencies. Make sure to cover receipt of application, document review, KYC screening, PAN validation where applicable, FATCA capture, risk rating, maker-checker review, account creation, and exception management. Question 3. What documents would you typically request for an individual investor during onboarding? For an individual investor, I would normally request a valid identity document, proof of address, PAN or other tax identification number, bank account proof, and a completed application form. For cross-border funds, I would also capture FATCA CRS self-certification, tax residency, date and place of birth, and source of wealth where required. The key is to validate documents against policy, check expiry dates, and ensure the account details match the investor. In your answer, talk about identity proof, address proof, PAN or tax identification number, bank verification, FATCA:CRS self-certification, suitability declarations, and jurisdiction-specific regulatory requirements. Question 4. How does onboarding differ for a corporate or institutional investor? Corporate onboarding is more ownership-driven than individual onboarding. I would collect incorporation documents, registered address proof, authorized signatory evidence, board resolutions, tax forms, and FATCA CRS classification. Then I would identify ultimate beneficial owners and control persons through ownership charts and registers. If the structure includes trusts, nominees, offshore entities, or layered ownership, I would escalate for enhanced due diligence because the AML risk sits behind the legal entity. Be sure to mention entity formation documents, authorized signatories, board resolutions, ownership charts, UBO identification, control persons, tax classifications, regulatory status, and enhanced due diligence for complex structures. Question 5. What is PAN and why is it important in investor onboarding? PAN, or Permanent Account Number, is a key tax identifier for Indian investors. In onboarding, I use it to confirm the investor's tax identity, avoid duplicate investor records, and support regulatory and tax reporting. PAN details should match the investor's name and date of birth, or entity records. If PAN is missing, invalid, or mismatched, I would not simply override it. I would raise a deficiency and follow the fund's escalation process. While answering, focus on PAN as a tax identifier, its use in Indian investor KYC, validation against official records, linking transactions, preventing duplication, and supporting tax reporting. Question 6. What would you do if the PAN on the application does not match the investor's supporting documents? A PAN mismatch is a material KYC exception, so I would pause onboarding or restrict dealing until it is resolved. I would compare the application, PAN record, identity proof, and any supporting documents to identify whether it is a spelling issue, wrong PAN, or wrong investor. Then I would request corrected documentation from the investor or distributor. I would document the exception, avoid unauthorized manual edits, and submit the case for checker or compliance approval. Make sure to cover discrepancy handling, no automatic account opening, investor outreach, evidence collection, system notes, escalation, maker-checker control, and avoiding unauthorized manual corrections. Question 7. Explain FATCA and CRS in the context of transfer agency. FATCA and CRS are tax transparency regimes that require funds to identify and report certain investors based on tax residency. FATCA focuses on U.S. persons and U.S.-owned entities, while CRS is broader and covers participating jurisdictions globally. In transfer agency, I would collect self-certifications, tax residency, TINs, entity classification, and controlling person details. The quality of this data matters because it feeds annual reporting and prevents regulatory penalties. In your answer, talk about tax transparency, identifying reportable investors, collecting self-certifications, capturing tax residency, TINs, entity classification, controlling persons, and reporting to tax authorities. Question 8. What are common FATCA CRS onboarding red flags? Common FATCA red flags include missing tax identification numbers, unsigned self-certifications, a U.S. address with non-U.S. tax residency, or conflicting country information across documents. For entities, I would watch for incorrect classification, especially passive NFFE or passive NFE cases where controlling persons must be identified. I would also flag investors claiming no tax residency without explanation. These issues should be resolved before the account becomes fully reportable or active. Be sure to mention inconsistent tax residency, missing TINs, U.S. indicia, conflicting address details, entity classification errors, passive NFFE or NFE controlling persons, and unsigned self-certifications. Question 9. How do you identify ultimate beneficial owners during entity onboarding? I identify UBOs by looking beyond the investing entity to the natural persons who ultimately own or control it. Usually, policy sets a threshold, such as 25% ownership, but control can also exist through voting rights, agreements, or senior management. I would review share registers, ownership charts, incorporation records, and trust documents if relevant. If the structure is layered or nominee-driven, I would escalate because transparency is the core AML objective. While answering, focus on ownership thresholds, control through shares or voting rights, senior managing officials, ownership charts, registry documents, trusts, nominees, and escalation for opaque structures. Question 10. What is the difference between customer due diligence and enhanced due diligence? Customer due diligence is the standard process of identifying the investor, verifying documents, understanding ownership, and assessing risk. Enhanced due diligence goes further when the investor presents higher risk, such as a PEP, high-risk jurisdiction, complex structure, or unusual source of funds. In EDD, I would gather more evidence, verify source of wealth, document rationale, and seek senior or compliance approval. The level of diligence should match the risk profile. Make sure to cover standard identity verification, risk-based approach, higher-risk investors, PEPs, high-risk jurisdictions, complex structures, source of wealth, senior approval, and ongoing monitoring. Question 11. How would you handle a potential PEP or sanctions match during screening? I would never ignore a PEP or sanctions alert just because the name looks common. First, I would pause onboarding or restrict the transaction according to procedure. Then, I would compare identifiers like date of birth, nationality, address, passport, and entity details to determine whether it is a false or possible true match. If unresolved, I would escalate to compliance, document the review, avoid tipping off the investor, and wait for clearance. In your answer, talk about true versus false matches, pausing activity, comparing identifiers, escalation to compliance, documenting rationale, no tipping off, and restrictions until clearance. Question 12. What checks would you perform before accepting a subscription from a new investor? Before accepting a subscription, I would confirm that KYC is complete and approved, AML screening is cleared, FATCA CRS data is valid, and bank details are verified. I would also check investor eligibility, fund-specific dealing rules, subscription cutoff, minimum investment, and whether funds were received from the registered bank account. If there are unresolved KYC deficiencies, I would not process the subscription as normal, because the fund register must only reflect eligible, approved investors. Be sure to mention completed KYC, AML screening, bank account verification, FATCA CRS status, eligible investor checks, cutoff controls, cleared funds, account setup, and unresolved deficiencies. Question 13. How do you manage incomplete KYC documentation without delaying the whole onboarding queue? I would manage incomplete KYC through structured exception tracking. First, I would separate clean cases from deficient cases so the whole queue does not slow down. For deficient files, I would issue a clear request listing missing documents, owner, due date, and impact on dealing. I would prioritize cases near dealing cutoff and monitor aging. The key is speed with discipline. Progress clean accounts quickly, but never approve incomplete KYC without proper authorization. While answering, focus on triage, deficiency logs, prioritization by dealing date, clear investor communication, aging reports, temporary restrictions, escalation, and maintaining service levels without weakening controls. Question 14. What ongoing KYC responsibilities does a transfer agency team have after onboarding? Onboarding is only the start of KYC. After the account is opened, the transfer agency team must support periodic reviews, refresh expired documents, update address or bank changes, rescreen investors, and capture changes in tax residency or entity classification. Trigger events like ownership changes, suspicious transactions, or returned payments can require immediate review. Clean ongoing KYC protects redemptions, distributions, tax reporting, and audit readiness over the investor lifecycle. Make sure to cover periodic reviews, trigger event reviews, expired documents, changes in address or ownership, sanctions rescreening, FATCA CRS updates, transaction monitoring support, and remediation projects. Question 15. If an investor refuses to provide FATCRS self-certification, what would you do? If an investor refuses to provide FATCA CRS self-certification, I would explain that it is a regulatory requirement, not an optional internal form. I would record the refusal, notify the investor or intermediary of the consequences, and escalate under fund policy. Depending on jurisdiction and product rules, the account may be restricted, treated as undocumented, or subject to reporting or withholding. I would not guess the classification. I would follow documented tax operations procedures. Be sure to mention regulatory obligation, explaining requirements, withholding or reporting consequences, account restrictions, escalation, documentation, fund policy, and avoiding informal classification by operations staff. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.